And we have relationships with every carrier and every major insurance marketing organization so that we can bring the most amount of product to you to help you make a better decision. And that's something that differentiates us from most other agents, advisors, and firms, because I mentioned on a previous episode, the average amount of like annuity products that one advisor or firm sells is 3. I remember recently I had a meeting with one of the broker dealers that we work with, and we hadn't been working with them all that long, but we had started with them just to have access to a couple products that they have. And they said, man, you guys have been with us for a few months and we've never seen a team of advisors have such a widespread amount of products that they've wrote deals on, that they've put contracts in for. And I said, what do you mean? And they're like, you have like 20 different annuity products that you've written over the last few months. And most advisors only write like 3 or 4. And to me, I was like, that's mind blowing.
Yeah.
But it's because we're different, and we're proud of that. And we want to make sure that you're getting the best value. The only way to do that is to have access to every product.
Yep.
So what we're looking at here is we've undone the filter that we had applied just to show that American Equity income shield. And we are using the same exact scenario, but now what we're seeing is that these are being ranked according to highest amount of guaranteed lifetime income on a monthly basis after 5 years of deferral. And we'll see how the companies start to unfold. So we have Corebridge at number 1, Delaware Life at number 2, Athene at number 3, Nassau at 4 and 5, North American at 6. And then here you go. Here's American Equity at number 7. Not saying that they're a bad deal or anything. I'm just saying this is how we have start to evaluate is who's going to offer you the highest contractually guaranteed income, since that is the primary objective here. And then from there, we drill down into the multi-point inspection. So Zach, why don't you take us through how you would, look at this multi-point inspection when working with a prospective client? How would you take them through this?
Yeah, I think number 1 in using that multi-point inspection is finding out of those 5 key points, which of those top options or which of those key points are the top options in someone making that decision. Is that highest income guarantee the top option? Okay, well, let's categorize that as the number 1. If you told me the second most important thing for me in making this decision is the carrier rating, okay, well, let's categorize that as number 2. And then if you said, okay, beyond that, I want that enhanced income benefit or another feature. Well, now we can put these in a categorical ranking of what's important to you in making that decision. And then we can take a look at the software that we've got to use that tool and find out which options are best. So really what we're going to look for in that scenario, again, highest income guarantee. If we needed to make sure we've got the carrier rating, I'm going to go in a little bit deeper and we're going to find that right there. And lastly, if I want to take a look at how we can sustain that account value for a longer period of time so I can use that enhanced income benefit, then we're going to take a look at those key features of that fee, the crediting from the index performance, and the potential to sustain that account value for a longer period of time to use that enhancement. And not, the other thing to consider is not every enhancement feature is created equally. Some will be that doubling effect. And as we see in this example right here, this is a joint annuity. So this is a joint lifetime income, and that enhancement feature actually doubles. Not every carrier has that feature for a joint policy. So again, finding out more about what's important to that client and their needs to create the right answer or the right solution.
Exactly. And then in addition to that, not only is some of the carrier options for joint life where they'll double the amount of guaranteed income, others will only offer a 1.5%, 1.5x multiplier on the income benefit for joint. But another nuance to that is that some of these enhanced income benefit riders stipulate that you can only use that benefit if you're confined to a qualified nursing home facility, or others will offer the ability to use that benefit and qualify for it, even if you have that skilled care at your own home. But not all of them allow it to be used at your own home. They Some of them have a requirement that you have to be confined to a qualified nursing home facility for at least 90 days or more. And the way that we know the difference is our software here is designed to identify whether or not they require you to be at a nursing home or if they don't. So you'll notice that these first couple, let's use the Delaware Life and this one from Athene, you'll just see that in parentheses it says 2 of 6 activities of daily living. That's an indicator that if you qualify, then you can use that benefit and they'll pay you that enhanced amount even if you're getting that skilled care at your own home. If we come down to this North American product, you'll see in parentheses it says nursing home. That means in that contract, it requires you to not only be unable to perform 2 out of 6 activities of daily living, but it also requires you to be confined to a qualified nursing home. So those are the nuances that most people don't know about. Half the time, the agent talking about this doesn't know that. And that's what we're trying to do, is just shed light on these areas of opportunity for improvement so that we can help, consumers make better annuity buying decisions. But I know that there's agents watching these videos and listening to these podcasts because I've gotten a couple comments, and I'm hoping that we're making a difference with them too and lifting their annuity IQ to help them represent our industry in a better way.
Yeah, this is something that, if we're putting any dollar amount into it, any premium that goes into it, it's a big decision. So we want to get it right. There's no reason that we should be glossing over this information or putting a half-assed effort into providing the right information. I think a lot of times we might have a meeting where we meet with somebody for the first time and we've spent some time uncovering what's important to them. And at the end of that meeting, we find out they tell us, "Hey, I'm not ready to make any decisions yet." Well, I sure hope not. We shouldn't be ready. We've got more information to cover, and we want to make sure that we're fitting to your criteria of what's important to you.
Exactly. And that's critical. And, this isn't a one and done type of decision. Typically you should be spending at least 3 to 4 meetings with the person you're working with to truly do the thorough evaluation. That's what we usually run on, is a 3 to 4 meeting process.